Once again, grade 12s, we want to continue with our debtors and creditors reconciliation, but this time we are more biased to debtors age analysis. We are required to identify internal controls on debtors and creditors, identify internal audit over debtors and creditors, analyze and interpret debtors age analysis, prepare a debtors reconciliation statement. Now, internal controls on debtors and creditors is a common topic. I urge you just to read through the PDF that I have sent through. Similarly, with the internal audit over debtors and creditors, it is more of theory. I also urge you to read through and get the facts. In grade 12, we are more biased to be an auditor than a bookkeeper, so we need processes. On definition of terms, we must refer ourselves to page 377 from the New Era textbook. We need to get the information right before we start the analysis. I have defined a few terms. The rest you have to read through as you go to the page. Age analysis can be defined as a schedule which works out for how long the debtor has owed the money. Credit terms. These are the terms and conditions of buying on credit. It includes the credit period, credit limit, discounts if any, and interest on overdue accounts. Credit period is the maximum number of days given to a debtor to settle an account, usually 30 days. Credit limit is the maximum amount a debtor will be allowed to buy on account. It is calculated from the proof of income. Present balance is the total the debtor is owing at a given date. It is the total of all the debtors from the previous months. Current balance is what the debtor is owing in the current month, the day the analysis or the age analysis is prepared. 30 days is what the debtor is owing from 1 month ago. 60 days is what the debtor is owing from 2 months ago. 90 days is what the debtor is owing from 3 months ago. 120 days is what the debtor is owing from 4 months ago. Then percentage outstanding, we can express what the debtor is owing for current 30 days, 60 days, 90 days, or 120 as a percentage of the total. So what the debtor is owing for the current divided by the total will give us percentage outstanding. What the debtor is owing for 30 days divided by the total will give us the percentage outstanding. Importance of preparing debtors age analysis. This is a common question, but they do not phrase it the way it is given in the notes. They phrase it to suit the grade 12. They might say, how is the analysis of debtors benefit the business? If they phrase the question like that, they are still asking the importance of preparing debtors age analysis. So you just have to understand that they don't give everything easily. Now there are few importance you are going to read through and add on the list. It helps the business identify debtors who are reliable and it helps identify debtors who have exceeded their credit limit. It helps business identify debtors who take chances by paying too late and whose accounts must be charged interest. It also helps the business identify if accounts have to be written off or handed for collection. It also helps, or it acts as a guide when the business decides credit limit. When that happens, those who are adhering to credit terms and are fast paying credit limit may be reviewed upwards. Those who are slow payers or have accounts which are long overdue, their credit limit might be reviewed downwards. Now, we want to help analyze a debtor's age analysis. We are given credit terms which says debtors will be given 60 days to settle their accounts. Debtors settling their accounts within 30 days qualify for 4% discount. After 60 days, interest is charged at 12%. Then after 90 days, accounts will be handed over for collection. This is an example of credit terms. Now, the debtors have been analyzed and we have already a question. We want to identify different problems which are arising from this debtors age analysis. We need to quote evidence and figures to support our answers. So we must be guided by the credit terms and also our understanding of those definition of terms. Most of the terms we've already defined them. Let us check the first debtor, Jessica. Jessica is owing currently the total of 11,800. It is made up of credit sales for May and credit sales for April. This data is within the credit terms because they are given 60 days to pay. The problem with Jessica is exceeded a credit limit of 10,800 by 1,000. So Jessica has exceeded a credit limit. The solution is do not sell to customers who are likely to exceed their credit limit. Our second debtor, Temoko, is owing us 10,600. The credit limit is 15,700. This account is long overdue and there is no action for the past 3 months, which shows that the debtor might have relocated. Interest must be charged on this account or it must be handed over to Antonis for collection. Victor is owing 8,130 with a credit limit of 22,300. This debtor is within the credit limit and also is paying his account fast. So we can say this debtor is a fast payer or this debtor is new. He just started buying from this business in May. So it's maybe a fast payer or is a new debtor. But if he keeps on like this, this is very good. Carl credit limit is 7.5. He is owing currently a total of 7.5. But the debts are spread to in the current month 2,000, 1 month ago 1,720, 2 months ago 3,780. Technically this data is within the credit terms, but if this 3,780 is not paid at the end of May, then that account will be overdue and it will be risking to be charged interest. be taken not to sell anything on account to this debtor, because the debtor might exceed now a credit limit, and because if he doesn't pay, he will not be complying with the credit terms. So we are not also encouraged to sell to customers who are not complying with credit terms. So as we are explaining this, we are explaining in line with the credit terms, in line with the credit limit. But the question which says, is this business controlling its data as well? The answer might be no, because if you notice the 28% of 10,600, this account is likely to be a bad debt, and a percentage of 28, it is too much. We need to reduce that percentage to at least 5% or less. Now, I have summarized the possible problems and possible solutions. As you go to answer this question, it is mostly a theory question, and I have said it is a problem solving question. So I'm giving you possible problems that you might be looking for. Debtors exceeding credit limit, accounts long overdue with the possibility of being bad debts, selling to debtors whose accounts are long overdue, debtors not complying with credit terms. Now, these are the possible problems. So whenever you are analyzing, you must have this in mind. Are there debtors exceeding credit limit? Are there accounts which are long overdue? Is the business still selling to customers with accounts which are long overdue? Or are debtors not complying with credit terms? Now, how do we answer? We identify, or we list or state the problem. Then you quote evidence in the form of, you can use percentages, or you can use the actual names and figures from the analysis. Now, some common solutions are: we must send reminders regularly, we charge interest on overdue accounts, we do not sell to debtors with accounts older than 30 days, or those who are likely to exceed their credit limit. We must offer discounts to encourage early settlement of debts. Like I've already said, state the problem, quote evidence, and suggest a solution. If you answer your question in that format, you earn full marks. The most interesting part is how to prepare now the age analysis. I have come up with some guidelines which are going to assist us. We haven't had questions when we actually prepare an age analysis. Most of the questions are commenting, but I want us to understand even how to prepare the age analysis. These are the guidelines. Start with the opening balance till the day the age analysis schedule is prepared. Then identify the month to be your current 30 days, 60 days, 90 days, or 90 days plus. We will get this clear as we do the task in the next slide. Allocate all invoices in the actual month of invoice. That is, which credit sales are in the current, which credit in 30 days or 60 days. Customers decreases the immediate sales or the last invoice, as goods must be returned within 10 to 14 days. So if there are any returns in the information, we have to decrease our last invoice. What the customer has purchased last is what the customer is returning. Receipts from debtors and discount allowed. This is now a bit tricky. When a customer is paying, we need to know the rule. Money received from a debtor must first decrease the oldest debt. That is most important. Oldest debt is paid first before the current debt. Very interesting. Money received from a debtor and discount allowed must clear the debt which is 90 days old. If the customer is in an account which is 90 days old, before clearing the debt which is 60 days old. That is what the rule is trying to say. Interest on overdue account is calculated accordingly based on the number of months the account is in arrears. With the example which you are going to do from the textbook, it is going to make all these guidelines much clearer. We need to turn our books to page 300. Page 378, we want to do task 11.13. This is a question which requires us to prepare an age analysis of Ben Jones. We are doing this in 15th September 2018, but we are preparing the age analysis until the month of August, from May until August. So our first hint says allocate the months. Which month must be your 30 days? Which month must be your 60 days? Which month must be your 90 days? Now, our current month is the August, because this is the latest month, so this is the current. Then our 30 days is the July. Anything that happens in July is what is our 30 days. 60 days from August will be June. So any transaction for June must be checked on the 60 days. Then anything from May will be our 90 days plus. That will be our opening balance. So you first allocate the months to the sections of our age analysis. So our current month is in August. 1 month before or previous month is July. 2 months previous is June, and 3 months ago will be May. Now, as we follow the rules, it says allocate invoices accordingly. Our balance, opening balance for May will be the oldest account or the oldest debt. This will be our 90 days plus 2.4. I have matched the color there and the color in our workings. Then another invoice which we are allocating accordingly is we sold on the 18th of June for 6,000. So this goes to June for 60 days. Then we have another invoice in July for 8,300. This is for an account for 30 days. Then in August there are 2 invoices. There will be accounts for August. Now, once we have inserted the sales or the invoices, the next thing is to check our returns. We have credit note for June. The immediate sales was the 6,000. So we are assuming that this 600 is of the stock that was purchased, that was sold on the 18th. So this account must decrease because returns naturally decrease. So 6,000 minus 600, the data is owing 5,400. The last part now is to allocate the payments or receipts and its discount, starting with the oldest. So we are going back to the transaction one by one, and we start now to clear the oldest debt. After our opening balance is 3 June, the debtor paid 1,200 and we gave the debtor 60 Rand as discount. What it means is we go now to the oldest debt, which must be cleared first. 2.4 minus 1,200, the receipt minus the discount. So this account is still, the debtor is still owing 1,140. On 4 July, the customer paid again 1,800 and we offered the customer 90 Rand discount. This amount must still go and clear the oldest debt, which happens to be 1,140. So out of 1.8, 1,140 must settle this account to give us a new balance. Then we are remaining with 660 of the 1.8. Because we've cleared now the oldest debt, we move now to the 60 days debt. The 660 balance will decrease now our account for 5,400, plus the discount also decrease that account. Our new balance now for 60 days will be 4,650. On the 13th of July, the customer paid 2,000 and we offered 100 Rand discount. Still, we are not done with the 60 days debt. This payment must clear that one first. So we are going to say 4,650 minus 2,000 minus the 100 Rand discount. This will give us a new balance of 2.550. We are continuing with the receipts. On 5 August, the customer paid 900 and we offered 45 Rand discount. Still, since we are still owing the 60 days, this payment must go and clear that debt. So we are going to say 2.550 minus 900 minus the discount. We are now owing, the debtor is now owing 1,605. This will be our last receipt because we have come now to the end. So with this, we now summarize the balances now into the actual age analysis. These were workings. Now our age analysis will look like this now. 90 days, there is now a new balance. The customer cleared. The 60 days account is, the balance is 1,605. And 30 days, it remains at 8,300. And the current, it is 4,550. If we add these three figures, it must give us what the customer is owing, 14,455. So this is how we prepare the age analysis. Very interesting. You will see as we do the calculations. If you follow the guidelines, you won't have problems. We are still going to use New Era, pages 378 to 382. We will be having some activities. 11.14, preparing age analysis. 11.15, commenting on age analysis. 11.16, commenting. So these are the three activities that will take us through. We use our workbook. We are going to check these workbooks, and good luck.